Hello, manufacturing company master budgets. Today we're gonna do the direct materials budget, which depends on the production budget. So as you can see here, master budget components for the manufacturing company, we have operating budgets and financial budgets. We are still in the operating budgets and we're gonna do direct materials budget today. Again, it depends on the production budget. So we have the balance sheet at end of 2018, which is beginning for 2019 balances. And this is the production budget which we prepared in the previous video. Okay, so we're gonna use the budgeted tablets to be produced, okay, to prepare the direct materials budget. Okay, so we're gonna need these numbers. Now let's prepare direct materials budget. We are working on 2019. So as you can see, we have quarter 1, quarter 2, quarter 3, quarter 4 total for the year, and quarter 1 for 2020. So direct materials budget depends on the production budget. So we're gonna start with the tablets to be produced, or number of tablets to be produced, which we're gonna get it from the production budget. Then we're gonna multiply it with direct material cost per unit equals direct materials needed for production. Then I'm gonna add ending inventory. I'm gonna get total direct material needed. Then I'm gonna subtract beginning inventory equals budgeted purchases of direct material. As you know, in the production budget, we were working on number of units. It's not in dollars, okay? So I need to convert it into dollars by multiplying the number of tablets to be produced with the cost per unit to get the production of direct materials cost. Then I'm gonna add ending inventory of direct materials to get this subtotal. Then I'm gonna subtract beginning inventory of direct materials to get the purchases of direct materials. Okay? So let's start with the first one, or the first row, which is number of tablets to be produced. So from the production budget, again, I'm gonna get the numbers. In quarter 1, number of tablets to be produced was 410. In quarter 2, 560. In quarter 3, 610. In quarter 4, it's 660. So the total will be 2,240. Now, let's read the information given above the table. The purchasing department has projected that the cost of direct materials is $150 per unit. So I'm gonna multiply the number of units with the direct material cost per unit, which is 150 each. So now I need to multiply to get direct material needed for production. Okay. Now I need to add ending inventory of direct materials. Okay, let's go back and read. The company now needs to determine the amount of materials to purchase each quarter. The amount of indirect materials needed for the production of tablet computers has been determined to be insignificant and will therefore not be considered in the calculation. So we're gonna assume that all the raw materials will be direct materials, okay? No indirect materials, since it's insignificant. This means that the amount of materials in the raw material inventory account is assumed to be only direct materials, okay? Now, the December 31st, 2018 balance sheet indicated the raw materials inventory account has a balance of 30,000. So this is the balance sheet at the end of 2018. which is the beginning for 2019. So if you look here, under current assets, raw materials inventory balance is 30,000. This is at the end of 2018, so it's gonna be beginning for 2019. Okay, so this is the beginning inventory of direct materials, since he said raw materials inventory is all direct materials, because the indirect materials is insignificant. So the 30,000 will be written here. Again, we got this number from the balance sheet. Now the company desires to have an ending inventory in raw materials each quarter equal to 40% of the next quarter budgeted production. Okay, so here is the ending inventory equation. It's gonna be 40% multiplied by next quarter budgeted production. So for quarter one, I need to multiply 40% with the next quarter budgeted production, which is 84,000. In quarter two, I need to multiply 40% with next quarter production, which is 91,500. In quarter three, it's 40% multiplied by 99,000 from quarter four. Now in quarter four, I need to multiply 40% with next quarter budgeted production, which is quarter one 2020. Okay, quarter one 2020, but I don't have it here, so he gave it to you. The desired ending inventory in quarter four, it's 42,600. It's 42,600, so it's given. Okay, so let's find the answer for the rest. Okay, now for the total, which means for the year, okay, of 2019, ending inventory will be only the last quarter balance, which is 42,600. We cannot add them up. Okay, you just take the last quarter. Okay, now total direct material needed, I need to add direct material needed for production plus ending inventory. Okay, let's add them up. Okay, now beginning inventory for direct materials will be, in quarter one, it's 30,000. Again, we got this number from the balance sheet. Okay, for the raw materials inventory account under current assets. Now, ending inventory balance for each quarter will be the beginning for the next one. Okay, so the ending for quarter one will be the beginning for quarter two. Ending for quarter two will be the beginning for quarter three. Ending for quarter three will be beginning for quarter four. As we said, for the 30,000, it was ending of 2018. So it's going to be beginning for 2019. So as you can see in the balance sheet, it was at December 31st, 2018. So it is the end of quarter four in 2018. Okay, so it's going to be beginning for 2019. Okay. Okay. Now for the total year, okay, what will be the beginning inventory? It's gonna be beginning inventory for the first quarter, which is 30,000. Okay, so for the ending inventory for the year, I'm gonna take the last quarter. Okay, because this is the end of this year, while for the beginning of this year will be the quarter one balance. Okay, so for the end we take the last one, for the beginning we take the first one. Okay, now budgeted purchases, I'm gonna subtract beginning inventory from the total direct materials needed. So for quarter one, I'm gonna subtract 30,000 from 95,100. I'm gonna do the same thing for all the quarters. So we are done with direct materials budget. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.